Hello, good morning, good afternoon, good evening, depending on your time zone. This is your host, Dr. Peter. Welcome to this weekly update. I'll be pushing extra for you to understand the concept and to be on the right side of the trade. I want you to probably listen to these or watch this video over and over to understand the concept. The concept I will be talking on is navigating trading with complete price action, wave, and structure. Navigating trading with complete price action, waves, and structure. Before I delve into what I have to talk about and the analysis proper, let me first talk about the price action that I'm interested in. Stay with me. Now, if you look at these candles here, you will see two candles pattern. These and these, they are one. These and these also, they are one. Those are the candle patterns I want you to pay attention to. This is an engulfing candle. This also is an engulfing candle. Now, talking of the pin bars, this is a bullish pin bar, and this is a bearish pin bar. Anytime you have a pin bar like this forming, for instance, a bearish pin bar, and it closes, it means that the price opened here and it was forced to the downside, to close to the downside. The psychology behind this is that at some point, the price will not continue to go bearish because it was forced down. So there are liquidities that has built up, above this closure, and what the price will want to do is to still navigate and correct to the upside before anything would happen. So when you see this, don't think that price will continue to go down. There is a forced closure to make the price close lower. So immediately price will want to correct to the upside. When you see this pin bar, which is bullish, it means that price was forced down by the seller, but the bulls, which is the buyer, they closed it upwards. And when you see the appearance of this pin bar, don't you think that price will continue to go? The immediate direction of the price will first be to the downside, either correctively or impulsively. So if it's impulsively, that means they will continue to go to the downside. But if it's correctively, they will correct to the downside before they turn back to the upside. In this case, they will first go up before they start selling if it's going to correct to the upside. But when we say correctively or impulsively, if it's an impulse, that means they want to continue to the upside. If it's correctively, they will correct, then turn to the downside. But the significance of this price action is that price still has something to do upwards before anything. Likewise, this place, price still has something to do downward. So the immediate reaction or direction is forced to the downside before anything. Here, the immediate direction is forced to the upside before anything when you see a pin bar like this. Now, when you see this is engulfing candle, which is properly closed. When you see this, it is a momentum candle that is telling you, if it's in a case of a buyer, it means that most likely the price will continue to the upside. Here, the same thing. If it's a red candle, which is the bearish candle, it means the price had closed, opened, and closed downward and is continuing to the downside. But in this case, it wants to continue to the upside. That is different from here. Though bearish, correctively to the upside, the false direction is here. Now, I want us to understand the significance of these candles. Let's go to our chart. Like I said, navigating the trading with complete price actions, which means that the price action has to close properly before you begin to interpret. Like this is 4-hour time frame on the DXY. These are closed properly. This 4-hour candle has closed properly as the momentum candle, which you will think the price wants to go down because it has confirmed. Now, look at something here. This is a pin bar, and it's occurring in the middle of buying pressure. And the hardest pin bar, which means that the seller had forced the price down and the buyers forced it to the upside. The buyers still had a little, but eventually price came down. So you can see what happened in this case. But it's not a proper pin bar, it's just like an hammer here. This is an example of a pin bar here also. So we would see how this interprets. A pin bar or an engulfing candle. When you see an engulfing candle, it means that in this case, the direction is towards the down. But in the immediate time frame, this will not help you. Whatever the candle appearance that you are seeing on the lower time frame, you first has to switch to the higher time frame to see the kind of price action that you are going to get. Look at this price action on the 4-hour time frame, engulfing. Now, the next one is to switch to the daily time frame. Switching to the daily time frame, this is almost closing. When you see this appearing like this and it closes like this, it appears as if it's a strong statement, as if price wants to go down and continue downwards after this correction, because the DXY had been going down, but all of a sudden we saw this reaction. It was a correction, an ABC correction to the upside without breaking a 1618. I think it terminates at almost 123 zigzag before we saw this reaction to the downside. So this also looks engulfing both on 4-hour and both on daily candle. But where is the direction of this? We have to see. Let's go to the weekly and see what the weekly is telling us. Look at what the weekly is giving us. The weekly, it is daily engulfing on the both the 4-hour and the daily time frame, but on the weekly time frame, so we can see a wick appearing. Seeing this wick, the only thing that will tell you is that this price will not continue immediately. They have business to deal with here. They still have some business to deal with here. The difference between this week and this week is that in this case, you first add an engulfing candle. And that is a strong statement that the bears are ready to push the price to the downside. What you saw here is an attempt, let's attempt to see if we can overcome. But this is a strong statement in itself, so they have to force it down. So price is not going to correct again to the upside immediately. The price will go down because this engulfing candle supersedes this one. But in this case, this is what we are seeing. Don't think that the price will continue to go down. The appearance of this means that after this immediate structure on the lower time frame is completed here, the price will first correct to the upside. I don't think price is going to break the upside based on what the daily engulfing candle is saying. But of course, we can see that the price first is going to correct to the upside before any further downward. Would we break this to the downside is another thing entirely. And that is where what will come into play is what is the invalidation level where we say that this is not that the pressure is going up again, but they are going to come to downside. The invalidation level here will now be here at this level of this candle here. So once the price breaks that level, know that the price is going to break the bottom again. But for now, immediately, don't sell from here. We're going to wait for the reaction. Is it an impulse to the upside or a correction? We are expecting a correction based on the mood of the daily candle and the 4-hour candle, at least a correction. Would we get a 3-wave correction to the downside, or will continue impulsively to break this level? Now, all that said, we think that price will still correct to the upside before coming to the downside. Breaking this level is another thing entirely. Let's look at the move of this market in the monthly candle format. Now, seeing the monthly candle, one thing we will notice here is that the bears took this down. Immediately, the bulls came to form a solid candle above this. In as much as this is still within a consolidation zone, for them to have overcome this is signaling something, as if we are almost at the end of this move to the downside, if not at the end. But what is typical of any corrective format, if this is not going to, this move of A, B, C is not going to go into an impulse that is going to be longer and breaking 1618 to the downside, at least it should take an 100 extension. We are not there yet. We are almost at 100 extension. So, and as a matter of fact, not getting to 100 extension clearly tells me that the structure to the downside on the higher time frame, which is the monthly time frame, is not completed. So what could happen? Because that is not completed, it's that we are building something similar here to end this in an ending structure, to break down one more before at least we correct to the upside, or we continue impulsively to the upside to break the top. So the appearance of this one, breaking this, could mean two things. One, a manipulation by the market, since the structure is not complete to the downside, a manipulation sending a dummy that we are going up, because it doesn't just appear to take the top here. It's either a dummy, a manipulation, and the price will continue to the downside, or that now we want to correct ABC to the upside. So which means that this is going to come down the more, go up again to break this top. So whatever is cooking here is 50-50. But based on what we know about the structure, we'll say that the price most likely will correct to the downside or move to the downside to break the bottom, which is 50%. And again, probably will just correct to continue to finish ABC correction. This move, because it didn't tick 100%, can only be corrective to the upside, which it can now be a double zigzag or anything, or 11 swing or 7 swing, if they are going to do that to come to downside. But having said that too, the structure of 1, 2, 3, 4, 5 is not completed yet. So it looks more like probably a dummy to fake people out and grab the liquidity before they now continue downward. So what is the approach? Because it doesn't just, anytime you see this on the monthly, going against the run of events, like in this case, it might signal that they are changing the trend or that they are doing a big correction. So we should keep that at the back of our mind. The only thing you can now do selling is that when you are selling here, you want to continue to trade your stop loss. And, after a break of structure, hide behind the structure that is broken to go down. That's what you can do. And it's a micro structure or intermediate structure. You hide there. But now, where to hide will now be here. As this is is making its move to the downside. Now, let's now go back again there and look at, we knew from here that the price will only still correct to the upside before they continue to the downside. So that is what we are saying. On the daily, because it's moving to the downside on the daily, which is against what we are seeing on the weekly, tells me that you can see that this move is just like a pin or a wick on the weekly. So it tells me that the weekly tells me that the price will correct without breaking this point here or this point here. Price will correct to the upside to go one more down. Now, going one more down, that is where we are now going to begin to, this leg for me will be an A leg, we'll see a B, and the C leg is what we are going to, put our interest on. Is it going to break this invalidation level? If it breaks this invalidation level, then you can now begin to say that the price is now going to complete the 5th wave to the downside, which will be the last wave. And of course, we expect it to be an impulse. So that is one after the correction of the second correction. If you go up and see if it's a B and not a 2, we expect the C also to come down impulsively. So the extent of that will tell if we are invalidating this place or not. That's how to plan it now. On the 4-hour time frame, we may have had a 1, 2, probably a 3, a 4, probably a 5. So we need this to come down to finish a 5. So if we got 1, 2, 3, 4, 5, which is an impulse here, ABC correction, around this area, C, the completion of a B or a 2, and the last push to the downside, you're going to hide behind a B to see how price is going to throw impulse to the downside. If it's going to break this invalidation level here, which is here. Once this is broken, then just know that this is nothing but A, B, C to the upside, and that this is coming. So we need this to correct. If it goes down, it corrects to the upside, then we are good to look for a sell. If it goes back impulsively, it's going to break the top. So we need the format, but from the impulse here, we are only expecting a correction and a further down and an ABC to the downside, at least. Let's look at euro dollar. I've said a lot. It's going to be the same. A 1, 2, probably a 3, a 4, and the 5th wave is going up. So we're going to see where that will get to. This, of course, I don't expect it to even click or tick 1.1700 before we see a push to the downside. On the daily time frame, So it's the same thing an engulfing can do, just like we said. So for now, we will not expect, after grabbing this liquidity here, the price to break down immediately, but at this correct, one more top, one more up. Breaking this invalidation level means that we are going back to the upside. On the weekly, it's going to be a week. You can see, which means that the direction, immediate direction, is that price may go up a bit, correct to the downside without breaking this bottom to go up. And if you want to continue to go to the downside, then the price will not break this top, which is an invalidation level, do an A-base to the upside, then go up, which means that if it's going to go up, then it's going to go up as an X, then thereafter continue its move. So it will not be A, B, C of a W, and X, and A, B, C again before we turn up. But for now, what I'm seeing here, it's a correction to the downside first, and we'll see the C leg, how far it's going to go. If it's going to break this, then we'll plan ourselves. So you must know where to begin to trade. Here is after, if you want to buy this, let it correct to the downside. Look for your correction for the point of entry to buy. And when you are buying that, you guide your stop loss, you trade it and see if we are going to break this invalidation level at this point at 17,800. On the monthly, that's where it's a bit different from the DXY. On the DXY, the other candle had enveloped this, but on the euro dollar, it didn't retrace to the end of it. So we'll see, that's where it's interesting. So on the DXY, it could just be like a liquidity grab, then to manipulate the market to force the seller or the buyer of EURUSD out, and these may continue to break the top, at least to tick 1.1900. Pound USD, we are seeing the emergence of this on the Pound USD. This probably looks a bit different because of the magnitude of the pull or push to the upside here. This may mean that the price may still go more down to give us without breaking this bottom here, we may see, a 7 swing at least before we go to the upside. I don't see this breaking the top. Look at the magnitude or the setup, the bearish pressure almost enveloping 2 months candle at the same time. This is big and this is huge. So it's different from what we are seeing on the EURUSD. EURUSD may break the top, but here on the Pound USD, I don't see that breaking the top. So what I see here, it's probably a correction to the upside. Let's look at the mood on the weekly time frame. Weekly time frame. So yeah, we might see this as an A, B, and a C. Now looking at the pin bar that I talked about here, so you can see the emergence of this pin bar. Even though the pressure on the weekly is still that we still have a liquidity to grab here, the bulls, the bears have forced the price to the downside, but now we are going to see price correcting to the upside here without breaking this. So this area will be a point of the point to break. So, or we say invalidation level here, 1.35, 850 or 870 area. So if we don't take out this invalidation level, then the price will continue to downside. It might just mean that we are doing an ABC of a W, and this will go up as an X without taking off this area. Then we now have another 3 swings to the downside without breaking this low before we see more upside. And on the 4-hour time frame, on the pound USD, no, on the daily now, on the daily, so we can see that's the invalidation level here. And so this is what I see. Probably are going to have a three wave correction to the upside, before we get here and come down on the daily. So the mood is different on pound USD as opposed to euro dollar and DXY. So you can see the trust is not that deep here. So this might just be a B wave, a 1, 2, 3, 4, 5 here, a B wave. Probably are going to see a zigzag to the upside without breaking this top before we come down again. If you look at NZDUSD, the first to trust is the candle formation on the higher time frame. And we read that mood before we interpret. Here too, on NZDUSD, so we can see also almost the same after this push. This may have gone on up here as an A. Probably we are about seeing a B wave to the downside, which is going to give us a more correction. Sorry for that break in transmission. It was due to power failure, so we have to continue. So there's the mood here also. It's similar to that of pound USD. We are seeing this trust to the downside. I think we are going to have a deeper correction here. So most likely it's only on the euro that we most likely is going to break the top again. This might be an beginning of a B wave to the downside without breaking the top on the monthly. Looking at what is giving us also on the weekly time frame, so we can see an ABC on the weekly time frame. Invalidation level will be here at the height of the B wave here, 6,600 or so or thereabouts, and we might be having a 7 swing on the daily. So we can see that this is an A wave, an ABC of an A B wave. Then we want to see this go up, without breaking this top before we see more push to the downside. So it's looking bearish, more bearish on pound USD and NZDUSD without breaking the top. That's what we are saying. Now the next is USDJPY, USD yen. In the USD yen, you can see the way it has flashed down. So let's go to the monthly first to understand the mood here. On the monthly here, what price has done so far is it has corrected. Now, just like I said, when you see a pin bar form, what has happened here was we had this move to the upside here. The pin bar, which still tells us that the price will still go up. The second month, the same thing happened, that the price still want to grab liquidity, and we add this to the upside, and this closed properly. Now, whatever is forming here is the beginning of a new month. So we really cannot say, but because these are not really per se, it's more or less in a consolidating format. It has not really broken anything per se. Still tell us that we may be falling from here. We may have done an A wave, a B wave now. Then the C wave, we may have done an A of the C wave, the B of the C wave, and we are going to see the C of the C wave. So it will now be a WXY, where this Y is going to be ABC, also to the downside. So these may be the beginning of the move to the downside on the monthly. But let's look at the mood on the weekly time frame. Here, with this mood on the weekly time frame, tells us that what the price we first do here is to correct to the upside before we see more downside. So these are the liquidity graph that we saw on the weekly here, the week, and this also appear as a week. But now this is forming this way. We are going to see price go up immediately, and this is where you now look for your sell without probably taking this top price. I don't expect the price to take this top before we push more to the downside. At least we must have a three-way, if it's going to be a correction or more impulse to the downside. The invalidation level here is the end of this, the base of this B wave here. So we have AW, X, Y, or an A, B, C. This exactly, click 100 extension of this wave here, A, B, and a C. So we may be going to the downside now. On the daily time frame here, we know that we are correcting first to the upside. So we can see that engulfing candle appearance. So the monthly and all that was overrun what we have seen so far. But this tells us that though we had moved to the downside, for now we still have to correct before we see further downside. And on the 4-hour time frame, we have to see this burn out first before we correct and again go down. If one more time, order will continue. But once we take out the invalidation level here, then the price will continue to fall. Then the next one is gold. Gold. The next one is gold here. A whole lot has happened here. We are thought of a triangle, and so it's still looking like we just completed a triangle where we had this as an ABC of A, B, C, D, and E. Now, all we need to do here, since this E didn't get to the end of this C wave, is still valid as a triangle, but for this D wave, this price will need to break out of here before we say we have invalidated and that we are going up. So the point to break is 34.38. But of course, we need to also study the mood of what is going on. Okay. For now, let's look at the mood on the higher time frame, the monthly time frame first, for us to know the direction of this trade. On the monthly time frame, if you look at the mood here, it has been pinned back to the upside, that the sellers try to force the price to the downside. This has had no effect because after this body formed, then you just saw this and they took it back up. They will not be able to break the bottom here, and these are set the mood for more upward movement. So for now, what I can see now is that if anything at all, the price will still go up to grab liquidity, and if it breaks above here, then the bulls will continue to have their way. So for now, the direction is still to the upside based on 1, 2, 3 months candle formation. The direction here is to the upside. I don't see price breaking down for now, but we now need to see the extent of this move to the upside. On the weekly time frame, of course, you look at this pari passu with the the wave and the structure that is forming. So again, we can see that this is an A, B, C, D, and E for now here on the weekly time frame, and we want to see how far this is going to go. So this is going to take up this, and let's see how far it's going to go. Even here, it has given us a format that we are doing a correction. So when we had this push to the downside, it was a correction. On the daily time frame, so on the day time frame, we can see that this move is what we need to see. It has erased this movement like 1, 2, 3, 4, 5 candles at a go. Then we need to see, is this an ABC or more than ABC? An ABC, of course, you don't expect it to break 1618 before it's an ABC. But let's see what that is giving us on the 4-hour time frame. On the 4-hour time frame, we are seeing this move. The first move, the second move, and ABC. This should not go beyond a 1618. But if you look at this, these had passed 1618 already. That tells me this is looking like an impulse, that it is not an ABC, but an impulse here. So in this impulse, with 1, with 2, with 3, and if anything we are going to get now from this wave, it's after the completion of the internal structure of this wave, then we should see a bigger ABC correction to the downside. If I want to help you with that, let's see. Let me bring up my drawing here. So we can see that from here to here, let's quickly see. For those trading gold. So this is 1618 at this level. So the price had broken 1618, and this is like an impulse that E is done here, and it looks like this is going to the upside. That is what I can see. I don't see this backing down, but at the same time, never say never. So for inside this wave now, we can see 1 and a 2 wave. Probably this is a wave 3, and this is wave 4 here. Yeah, in between here, we will see the end of this move to the upside to complete this move to the upside as the inside of this one as the 1, 2, 3, 4, 5 to the upside. And we are going to see if we do that, probably we're going to see this as the 4th wave of in this mode. If not correcting this, I think what we're going to have is we have seen a 2, then this will finish itself as a 1, 2, 3, 4, 5. Then we should see the 4th wave in this magnitude. After that 4th wave in this magnitude, the price should go up to finish 5th wave in this magnitude, something similar to this. And probably without breaking this top or breaking this top, then we should see a bigger correction of ABC before we go or turn up again. So that's what I think we are seeing here. Then the last one, it's been a lengthy one today. It's Euro Yen. Euro Yen will be the last one. We are going to look at what the monthly candle is telling us. Here, the monthly candle. So what I can see here, at first we are taught that the price after this move of an ABC, that we have finished an ABC here, that what we want to do is to correct big to the downside. It doesn't look like that because even the price had broken this top now. So what I can see here is that we were thinking that this is an A, B, and a C to the downside. The monthly candle didn't show that anymore. It's like we are going to the upside. So what I can see here, if this is an A and the middle here is a B down here, okay, from here to here is an A, from here to here, it's a B. So what I can see here, is that within this wave itself to the upside, we are doing a 5 wave to the upside. We are doing a 5 waves to the upside, and this is a wave 1, and this is a wave 2 here, and this is a wave 3. We have just finished a wave 3 here, and probably this is a wave 4 that we have done here, a wave 4 in this regard that we have done here, and we are doing a wave 5 on the monthly. So watch again. After this move here, we had finished this one here. So we are going inside of this one to do 1, 2, 3, 4. And this is the 4th wave here. And we are doing the 5th wave. So this is the 5th wave that we're going to concentrate on. And in this 5th wave now, this is where we are. This 5th wave. So in this 5th wave, these had gone up as a 1 and a 2. And I believe this is just the 3rd wave. And we are doing a 4th wave in this magnitude, on that cycle, 1, 2, 3, 4, and this will still go down a bit more, then we go up to break the top. We can even take this top out. So if we have been selling now on this completion of this 4th wave, we are going to look for our exit of the sell. Then if you can sell to the downside, we'll sell to the downside again to pick a buy to break the top. Then we can now have a bigger correction that we correct almost this entire run to the downside as an ABC before further upside. That is what I can see here. So we are going to stay with this. Now, if I go on the weekly time frame here, going on the weekly time frame here, so we can see what I'm talking about here, that this is from here to here. This is just the 4th wave here, and they have finished this 4th wave, unfortunately. They have finished this 4th wave to the downside here. So we are taught that this is an A, B, and we will be seeing a C wave or probably break steady up to the other side. But usually we know that a break out of here also tell us that most likely the price will continue to go up. So we are running a 5th wave to the upside. That is what it is now. So not until the price does what it's going to do, so you don't, know what is happening. So we have an opportunity to get out of here now. So this is 1, this is 2 here. Now within 1 and a 2 here, then we are seeing building up. The 3rd wave here is 1, 2 of the 3rd wave. We have finished somewhere around here, the 4th and the 5th wave of that wave 3. So we are seeing a wave 4 similar to this part, not here, similar to this. So if I bring out my drawing to help you to see this, okay, let me bring out the drawing so for you to see that. I think it's not coming out. I thought I did. Okay, yeah, it's coming out now. Good. So we can see, let's take this one a bit up here. Good. So we can see 1 in green, 2 in green here, 2 in green here. So 2 in green there. So 1 in green, 2 in green. So we have seen the completion of 3 in green. These are broken out of wave 3. So if from what I taught us on how to use our trend line on the weekly time frame, so let's say that we didn't even draw it very well, and let's push it to this area, this particular trend line. Yeah, to that area to capture that. Good. So to capture that, so we had captured this base here. So which means here we had seen with 3 fell out of the trend support here. So we had seen the internal structure of with 3 in pink in purple, 4 in purple to finish 5 in purple. So to make up for 3 in green. So we are seeing that we are going to see 4th in green, which is very close to our entry around this area. This is our entry. So we're going to lose a few pips. Then we should be looking for a buy here. So once we buy, we're going to break the top to finish up this. And that will be a good ride to the upside once we finish this wave to the downside to buy. So once this corrects to the upside, we can look for further sell if we get that. So that is what we can see on the weekly time frame. So this is an engulfing candle also on the weekly, which is a statement that this is correcting. But if you think what it's going to do is to continue to go down, no. I've just told you and I've shown you on the on monthly time frame that is just part of this wave that you are still building a 1, 2, 1, 2, 3, 4, 5 here to finish this 3rd wave, and this is the 4th wave in green. We're going to go up to finish 5th wave in green, and after that, then we're going to look for a bigger correction to the downside. That is the move now. So on the daily time frame, what do we see? On the daily time frame, so now we are seeing this may have completed a wave A. If this would not break the top again, this may be that we are now coming to the downside. This is the first move. Then we'll see more correction. Look for, a sell, your stop loss around this area or slightly above it, a sell to the downside and to come to this area. We are almost there to look for a sell and to exit whatever buy or sell that you have at this level. Then whatever we make up of it from here to the downside, we'll do to help with this. So this I wish sure that this is not completed and this one is going on as a wave 5. So let's see. Let's see on the daily time frame. This is wave 2 in green here. We're not using these, we're using these. Wave 2 in green. So this is 38 to 40 is still possible. These had gone below 23.6, which might mean that we may still have one more leg to the downside. Now, let's look at this on the 4-hour time frame. So if you are planning a trade here on the 4-hour time frame, so what can you do? Planning a trade here, these came down like a flash. You can see the internal structure here as a 1, 2, 3, 4, 5. So that might just be the A wave. Usually A wave may behave like this, just come down like a flash. And these may have gone up also like a B wave, then probably we are seeing a C wave. This C wave looks as if it's gone down in 5 waves. We are going to see once we correct and break this top without breaking this area, we might look for a sell again. So that is what we are going to do. We'll look for, if this is going to give us a 3-wave correction, that will be perfect. So we need a 3-wave correction to make this like an A, B, then the first part of the C with one of a C to see this correct as a 2, then come down. 3-wave correction, that's what we need here, minimum, for us to be able to plug to sell. So that is what it is. And hopefully we understood all that I've said. Trade with care. Please like, share this and this will be of help to many people. Let them subscribe to this to this channel, and help us grow this community. Thank you.